course, we're going to be following the markets throughout the afternoon. You've got fears of a global recession, lack of faith in Europe, words from the Fed, just some of the things that pressured our markets this week. As of last night, you had the S&P down 7% for the week, NASDAQ off 6.4% for the week, and the Dow down almost 7%. Although we're flat now, this is shaping up to be the worst week for stocks since October 10th of 2008. Also happening here in New York, Palestinian President Mahmoud Abbas is asking the UN at this hour to grant his country statehood. I go one-on-one with Palestine Monetary Authority Governor Jihad al-Wazir. Plus, my one-on-one interview with Hilton Worldwide CEO Chris Nassetta on how his company is dealing with the global economic slowdown. And need a beer? We're live at Sam Adams Brewer Boston Beer Company. They are our latest American icon. Well, hello, everybody. I am Cheryl Casoni, and joining me for the entire hour today, I've got two of the great ones. James Frischling, co-founder and president of NewOak Capital and FoxBusiness.com star reporter, Mr. Dunstan Prowl, with me as well. Jim Frischling, I'm sure that many of your clients right now are coming into your office and saying, I am nervous. I do not like what my portfolio is doing right now. I do not like the volatility that I've seen this week.
The nervousness is probably a kind word. I think we've hit an extreme of fear. I think all of us have been commenting on the crisis of confidence, and this is on a global scale. So in terms of the volatility, I think I can almost say we've been somewhat range bound. People think things are looking better and we tick up, and we've had some obviously negative news, and here we are again, somewhat being stable. But a question I have for Chad is, if you said solving the European debt crisis would be the most important thing, what would happen? On the downside, what would have you change your view that this is actually worse than even people expect?
Okay, keep in mind that I was de-risking the portfolios 4 months ago because I saw the political risk start to rise. So what you have happening now is you're getting into that corner here where they have to, the monetary authorities, ECB, the Federal Reserve, as well as the European community, have to pull the trigger. They have to come up with a Euro TARP. They have to capitalize and inject. Now, what will happen here is over the next 3 weeks, you may have real stress within the financial markets. It may break some technical boundaries and all that other fun stuff, but there will be a solution, because no one wants to sit there and be at the helm of the political top here and allow a financial catastrophe to happen, which I don't believe will happen. So I believe the Federal Reserve, as inflation expectations come down, will go in and do additional quantitative easing that will scotch the risk trade, and you will see equity market prices go higher, as well as you'll see credit spreads narrow.
Chad Morganlander and Nicole and Phil, thanks to all of you for helping us cover the markets today. Again, the Dow up 16 points, a nice flat day, but yesterday not a good day, of course. Well, with borrowing rates at their lowest levels in 4 decades and the Fed deciding to enact Operation Twist on Wednesday, our good friend Mr. Dunstan Prowl wrote a great article about the shifting of the deck chairs on the Titanic. Explain the crux of the article.
Well, I'm not usually fond of using cliches in my writing, but I couldn't avoid it in this instance, the shifting deck chairs on the Titanic analogy. What you've got is the Fed doing this Operation Twist, and the idea of it is to lower long-term interest rates, i.e. mortgage rates. But as you pointed out, mortgage rates are at 4.0. They're at a 4-decade low. Mortgage rates aren't the problem. The problem is that people are afraid to make the largest investment of their life. Another problem is that people who may be ready to make it because of the credit crunch can't get the loans that they need. The pendulum has sort of swung back from where it was 10 years ago, where anybody could get a loan. Now, a lot of people who are perhaps deserving and want one can't get it. So you've got this huge, vast inventory of housing out there.
But I think what doesn't make a lot of sense to people at home, and we've said this over and over, I talked about this with Chris Nassetta in the last part of the show, was that you've got corporations right now that are flush with cash. You've got, what, $2.6, $2.7 trillion right now sitting on the balance sheets at companies. They're not using that. They're not using it to hire. They're not using it to invest, to build new plants. So what's the deal? Crisis
in confidence. You've got that same cycle of fear. You've got these companies out there. They're sitting on trillions in cash, as you pointed point out. They're even raising dividends. I mean, I've written about Texas Instruments, Target, FedEx, raising their dividends. So these companies are ostensibly doing well, but they're not hiring. And if they're not hiring at the higher end up here, they're certainly not hiring at the lower end, where, again, you get the problem of small businesses having a credit crunch. They can't get the money they need to expand.
What gets them then to change their tune? What gets a U.S. company, the ones that you're mentioning, FedEx, Boeing, UPS, I mean, these CEOs have already gone to the administration this week. They sent that letter saying, give us a break on corporate taxes. We're at 35% right now, the highest tax rate in the world. Give us a break, and we will start to hire. That's what they're telling the Obama administration.
That's one possibility, but then the Obama administration says no, and it's that back and forth. We've got an absolute logjam in Washington, which is really, I believe, at the core of the crisis in confidence. People are looking at our leaders, and we're looking for answers, and we are absolutely not getting them.
And yet, Jim, and I know we're going to talk about some of your picks coming up later on in the show, but at the same time, you've been fairly bearish on equities, yet a lot of these companies that we're mentioning here have actually been increasing their dividend to shareholders. So shareholders that own these stocks are winning.
Sure, and I have some bearish concerns. I know we're going to talk about them a little later, but we're not going negative on risk assets. Given where rates are and given, what you get paid nothing for cash, we do believe that you need to be looking at risk assets, just making very good decisions. And I really enjoyed your article, Duncan, and I have to say, he's right. It's not about rates. That's not what's going to motivate these companies that you're talking about to start going. There are other things that will, but the lowering rates further is not it.
Well, I want to let our viewers know that Dunstan's piece is up at our website, foxbusiness.com. Great website. You should really check it out, everybody. Well, you are not going to believe how much some airlines right now are charging you to check your bags. We have tips on how to avoid those big fees. And coming up next, we just mentioned it, Jim Frischling with ways for you to hold on to your stock gains in this horrible market. That is next. No pressure, Jim. We'll be right back to you in a minute.